Hi, welcome back everyone. In this video, we continue our discussion, and in this video, we are going to talk about the tax expenses, which is row number 16 of our income statement. So before we proceed, let's come to input and calculations and also rename this file. Alt F A O. The file number is going to be 19.finmod Britannia tax expenses. I come to input and calculation. I look at the segment which is row number 81 to 87. I go to data section and group them. So I have this information. I have everything grouped. I come to cell number 89, which is going to be tax expenses and tax on operations. So this will have a cell style of heading 3 for all these three cells. We come to cell number E90 and we write earning before tax. Then we will have tax expenses. I leave a blank cell. Cell number C93 will have EBIT, and then we will have tax on operations. Let's get the historical data for all the required cells. So for EBT, we come to income statement. Row number 15 is what we have for EBT, and we get the historic and forecast data for EBT. So cell G90 will have everything. So in this EBT, we have the historic and estimate years. We come to tax expenses. Let's get the historic information for tax expenses. So G16 to J16, I come to input calculation G91, pay special as link. Let's get everything for EBIT as well. So I come to income statement. We have earning before interest taxes in row number 12. So for historic and forecast years, linking it in cell number G93. Now we go up and we estimate the tax rate. Tax rate. This is going to be percent of EBT. So tax expenses divided by earning before tax. And here we have the tax rate. If we look, we can see that clearly the tax rate has been changed. The tax rate needs to be related to the recent information, that whatever has been the statutory tax rate. And that, of course, you can also get from the recent annual report of the company or from the government information as well, the government policy documents as well. We are going to keep the recent tax rate as constant for all the future rates, and everything is going to be under like optional input. Here we are not going to have anything like something called as input section for cell number P43 kind of a thing. What will be the tax rate? It is not in the decision of the management of the company. It is completely dependent on the government under which the company is operating. So for that, if there are multiple businesses which are running across the geographical locations in the world, then there is a possibility that different tax structure will be utilized, and possibility that could also be used at an aggregate levels. So right now, at the given structure, we are going to take the recent tax structure, which is 25.3, which is basically J43, and everything is going to be constant as what it is. So using this historical tax rate information, we are going to calculate the tax expenses. So the tax expenses will be the forecasted EBT multiplied with the tax rate. And in cell number J91, we change this to deviant. We select the array, which is for cell number K91, and copy this formula to right. So we have got this tax expenses, which we copy this, and we can get this to our income statement. We come under cell number K16 and pay special as link. And for cell number J, 16, we change the cell style to deviant. We are not going to forecast anything for other income. So I select this array and change this to blank cell. I select everything for NCI, profits from associates, tax exceptions. Everything is going to be under blank cell style. For dividends and other adjustments within the retained earnings are also not required for us. So these also are going to go under the blank cell style. We come back to input and calculation and we calculate the tax on operations. For tax on operations, we are not interested to get the data for historical information. And again, the requirement for tax on operations is for the purpose of the valuation technique which we will use. So we are going to calculate that and leave it as it is. So tax on operations from March 26, estimated EBIT multiplied by the tax rate. And here we have the tax on operations for the forecasted years. So this marks the completion of this part, which is forecasting tax expenses and tax on operations. If you have any queries, drop that in comment box. Thank you for watching the video.